Today I wanted to talk about the growth outlook, particularly in regard to the impact that COVID-19 is going to have on the Australian economy, and also talk about the policy responses that we've seen both from the fiscal and the monetary authorities. Firstly, the growth outlook. At the beginning of last week, Westpac released a report indicating we thought Australia would go into recession. That meant 2 consecutive negative quarters of growth. The main reason behind that, of course, is the impact that COVID-19 is having in the first quarter of this year, it was going to have on tourism and education, mainly reflecting the weakness in China. And in the second quarter, the impact upon consumer spending, mainly reflecting the fact that COVID-19 had spread to Australia and to other countries. Later in the week, we saw the government's fiscal stimulus package, $17.7 billion package, which included money for businesses, money for pensioners, for people on social security, and large write-downs for instant write-downs associated with investment. Our estimate, however, of the net impact of that package was that Australia would still remain in recession. And of course, it is interesting that that view was unusually no other major bank took. Since that, of course, we've seen indications that the government may indeed introduce even further packages. So it sounds to me as if they were certainly listening to Westpac's analysis of their first package. We've also seen a response from the Reserve Bank of Australia. The Reserve Bank of Australia has been intervening in the funding markets, providing 3-month and 6-month repo arrangements for the banks, and has also been concerned about the lack of liquidity in the bond market and has indicated they stand ready to support the bond market. But most importantly, they've indicated that the Governor will be making a statement at 4 o'clock on Thursday, and we expect that he will announce yet another cut to interest rates to the cash rate from 0.5 to 0.25%. That's what I would call the effective lower bound in rates. In a speech in November last year, the Governor indicated that they would not cut the cash rate below 0.25% and would certainly not consider pushing rates into negative territory. So that will see the end of the interest rate cuts, but we do expect that the bank will then introduce quantitative easing, which will have the bank determining where they would like to see the risk-free interest rate curve. And that, of course, would mean that they would have to intervene in the bond market to make sure that their objectives on the interest rate curve are reached. So, very, very important developments. Australia likely to experience a recession in 2020, and interest rates reaching the lower bound that they can possibly reach this week.